price of gold, if you've got a factor of 4.5 roughly from here to here. So 4.5, and if gold doubles, you've got 9 times gains against the dollar. And if other assets go down at the same time, like in the 2008 global financial crisis, from 2007 to 2011, real estate fell by half. But during that period of time, gold went all the way, gold tripled. And so if you... Gold Silver HQ says breaking. Silver is now only 11.8 times away from its inflation-adjusted, M2 inflation-adjusted all-time high. So it's got almost 12 times to go. Now that's against the M2, where gold is and what happens with other assets. This is against the currency supply. So these are going to be dollar gains. Do other assets fall in 2026? I think that by the end of 2026, we should have a pretty good market correction because things are in hyperbubbles once again. Julius says silver is going to triple digits by 2026. I've been saying triple digits for years. 2026 sounds like a really good year for it. Could be 2027 though. We don't know. But 2026, that really does sound like by the end of the year, we're going to be there. Global markets react. China's silver exports halted. State-controlled flow. New license mandate. And all of the countries around the world are realizing that they don't have any more silver stockpiles. The U.S. used to have the world's largest silver stockpile. It was the strategic silver stockpile was the title of it. It's all gone. We sold it all off, and now everybody's realizing, oh my God, you can't conduct a regular war without silver. Oh my gosh, you can't conduct a monetary war without silver. Silver's a monetary metal. Oh my God, you can't conduct a technological war, the war that we are in right now. Technology. You can't conduct that without silver. It's more needed for that sector, the technological sector, than anything else. And make gold great.
At the same time, the physical silver market is tightening worldwide. China's decision to restrict silver exports through licensing controls has drawn attention to a critical fact. Global silver stockpiles have largely vanished. The United States once held the world's largest strategic silver reserves. Those reserves are now gone. Silver is no longer just an investment metal. It is essential for military systems, advanced electronics, renewable energy, and digital infrastructure. As geopolitical and technological competition intensifies, silver's strategic importance is becoming impossible to ignore.
Did a chart here, or distributed a chart. How do I buy silver on Google hits a record high? And this is really interesting because this is the 2008 global financial crisis. This is when silver was peaking back in 2011. We went into a bear market. This is the pandemic, and look where we were in 2025. What will 2026 bring? Who knows? But it's going to be exciting. Smart Silver Stacker says gold to silver ratio continues to drop like a stone. Silver's time has come. Silver's time has come. This was on December 2nd. So it's pretty old, but silver started taking off like a rocket, and gold was still just sitting there. A few days later, Peter Spina on the December 16th published this chart, but this one is even shorter in time duration. This is the daily chart, and it was down to 66. Well, I like to look at things in a longer time perspective. So this is from December 19th of 2025. It was just below 65, 64.54 is the blue line. And we're going back to January 1st of 1970. And what you see here is that from 1985 until today, The line is sort of at the average where it was hanging out at. Silver has a lot of opportunity. In an insider's video I did recently, I called this the silver opportunity chart. The higher this is, the greater the opportunity. I was lucky enough to buy a good chunk in the pandemic plunge. When silver plunged, the opportunity went way up. So you have to go against your emotions when you're doing this. Everybody was panicking. Oh my gosh, silver's crashing. It's all the way down at $11. Time to sell. No, time to buy. So I've been lucky enough. I pay attention to this, and I have been lucky enough to buy on all of the. I buy more when it's up in this range. That's when I buy all silver, is when it's over 70. I would still be myself buying all silver. I've got a really good position. I don't need to buy any right now.
Search data now shows a surge in interest around buying silver, reaching levels seen during major financial crises. Historically, spikes in public curiosity have aligned with turning points in the silver market, including the aftermath of 2008 and the 2011 peak. Today's renewed attention suggests that silver is moving from a niche asset back into public consciousness. Unlike previous cycles, this demand is emerging alongside constrained supply, not excess inventory. The question is no longer whether silver demand will grow, but how the market will absorb it.
But as it gets down in here, I would add gold to my position. And when it gets down to here, I'd be buying all gold. But the reason for this chart, the green line, I probably should have put this at 33 or 35, but I just wanted to show you what everybody considered normal and average throughout the 70s bull market, is that silver was about 33 to 135, 133rd or 135th of gold's price. And that was normal, with enormous silver stockpiles available all over the world. Now, all of the silver is gone, and it's 1/64th of the price of gold. It makes no sense at all. In 1980, when they peaked, January of 1980, it dropped down to 14, and it is destined for this range again. It's going to go below 20, and there should be plenty of time. I believe it's going below 20. I believe silver is destined for triple digits, and the more that information that comes along, I'm starting to think maybe quadruple digits are possible. So this range, though, there should be plenty of time to catch that range. It isn't like you've only got one day where it hits the peak like it did back in 1980 when it hit 14 to 1. But I'm expecting it to actually blow past that. I think that you're going to see it down at 10 to 1 or something like that. That means that you can outperform gold by about 6.5 times right now. But gold is probably going to double, triple, quadruple. I don't know, but $8,000 an ounce is starting to sound a little bit low for gold. So I do expect it up at least at that range. And so if this is compounding the price of gold, if you've got a factor of 4.5 roughly from here to here. So 4.5, and if gold doubles, you've got 9 times gains against the dollar. And if other assets go down at the same time, like in the 2008 global financial crisis, from 2007 to 2011, real estate fell by half. But during that period of time, gold went all the way, gold tripled. And so if you had sold a home back then and bought gold with the proceeds, and then sold gold when real estate bottomed and bought real estate with it, you would have got, for every home that you sold, you would have been able to buy 6 other homes, 6 homes just like it. So the gains can be tremendous.
One of the most revealing long-term indicators is the gold-to-silver ratio. Over decades, this ratio has oscillated around historical norms, with extremes signaling opportunity. Today's elevated ratio reflects silver's deep undervaluation relative to gold. Historically, periods of scarcity and monetary stress have driven this ratio sharply lower, sometimes into the teens. In past bull markets, ratios near 30 were considered normal, even when silver stockpiles were abundant. Today, with inventories depleted, the imbalance appears even more pronounced.
Part of what's coming is sort of wrapped up in some of these posts. This is David Bateman saying, a guy I know in Utah just reached out to ask me how he should go about a $100 million silver purchase. A few are starting to see what's happening. Silver will be unobtainium soon. Well, what comes after unobtainium, when nobody can get it, is unaffordium, because they keep on offering more. When it hits unaffordium, that's probably the time to sell. Make some available again. But it makes me sad to see so many people cashing in their silver right now that the refineries can't keep up. Yes, this is the reason that I went down the road that I went down with precious metals. I was an investor first, then I started educating people, then I became a precious metals dealer. I wrote the best-selling books on investing in precious metals, and I was doing this to save my mission, save the middle class one investor at a time, because during great currency crises, financial crises, that is when dictators and despots step forward, when everybody is scared because the middle class has become impoverished. And we have a currency crisis out there in the future in front of us. And if the middle class becomes impoverished, they become desperate and they'll follow anybody that promises them a way out. Any good speaker that's charismatic that promises them, follow me and I'll make your life better. And that's where Hitler, Mao, Stalin, Lenin, these people all came from these type of crises. And so this makes me very sad as well.
When precious metals rise during broader asset downturns, their impact can be transformative. During the global financial crisis, real estate prices collapsed while gold surged, allowing capital to be repositioned at extraordinary advantage. Similar dynamics could unfold again. If gold multiples higher and silver simultaneously revalues relative to gold, the compounded effect could significantly outperform traditional assets. These cycles are not about timing tops. They unfold over years, offering repeated opportunities rather than single moments. History suggests such resets favor tangible monetary assets.
Then, the same day, David Bateman bought 350,000 ounces of physical silver last week during the dip at 57, up 8.6% already. Can't stop, won't stop. Buying more next week. Grateful for the slam today. That is the right attitude for everybody out there that goes into despair every time the price falls a buck or two. When the price falls, hope that it falls 20%. And if it hits the 200-day moving average, you might consider becoming I don't give financial advice. I just tell people what I do. 200-day moving average, every once in a while, prices have to come back and hit the 50-day or the 200-day. 200-day is always, throughout, historically, it's a good opportunity. And so David did that. He's grateful for the slam, to which Eric Jung says, how are they going to stop 100 Hunt brothers in the U.S., 100 Hunt brothers in China, and another 100 Hunt brothers from the rest of the world? This time, they are all going to take physical delivery. Well, guess what? They can't. There's not enough, at least not at these prices. Maybe at $200 or $500 an ounce. No, it would be more than that. 300 Hunt brothers? No, this is going to be quadruple digit silver. And then the Silver Crusader, most people don't know that their junk silver, what their junk silver is actually worth. Junk silver. This drives me crazy. So these are dimes, quarters, half dollars, and Morgan dollars and stuff. And this was back when silver was $57 an ounce.
Large-scale physical buyers are beginning to emerge, highlighting a crucial vulnerability. Silver cannot be endlessly created like paper contracts. Unlike gold, much of silver is consumed permanently in industrial use. As scarcity becomes visible, price suppression becomes increasingly difficult. Beyond markets, the implications are social. Currency crises have historically weakened middle classes, creating instability and desperation. Sound money has often been a stabilizing force. Silver's resurgence is not just a trade, it reflects deeper tensions in the global financial order now coming into focus.